Good afternoon and good morning to those who are in a different continent. My name is Samuel. I'm CEO of BONARD, and let me kindly welcome you to our webinar, Why Europe is so attractive to student housing investment. This session has been put together for three particular reasons. To give you a little bit of a context, namely that Europe is enjoying a little bit better position in sort of real estate investments globally recently. Also, we see sort of demographic shifts of international students opting for Europe a little bit more than in previous years. And also we are at the beginning of a new academic year, so it was timely to put together a webinar for this particular date. We made an effort to prepare data insight webinar that will feature both data as well as distinguished panel of speakers. That is very unique this time, that represents billions of euros with assets under management in student housing, as well as few billions of transactions in last 12 months only among these three distinguished panelists. We will have about 15 minutes presentation provided by my colleague Martin, Chief Growth Officer at BONARD. This intro market presentation will have about 20 slides, and it will be available after the session to all participants, as well as the recording of the session, as well as the demo session of our platform for student housing. For your information, we have about 800 something registered delegates for this session, out of which about 50% are investors, asset managers, and financial providers. And then the other half is from among the developers, operators, education providers, and media. With this, I would probably hand over to Martin to provide the market intro presentation about where the market is, has been so far, and then we will have a conversation with the panelists about where the market is going to. So thank you for coming and enjoy the session.
So thanks again for joining, and welcome everyone for joining today's presentation. It's my great pleasure to be focusing today on a European topic and why Europe is so attractive for student housing when it comes to potential investments. When it comes to BONARD, and many of the people that are in the attendance probably know about us, but we work with the investors, developers, operators, and lenders to provide the commercial due diligence. And we are part of the transactions to underwrite the market fundamentals, but also the asset and portfolio performance. We had a chance to work on more than 900 projects, including the portfolio underwriting, and as well has been part of many asset underwritings or plot assessments. And we have the most comprehensive overview of respective markets and NOI margins, OPEX breakdowns, CAPEX, yields, operators' fees, and many other investment and financial metrics that are needed for such an underwritings. Our platform combines data with the commercial due diligence to support a confident investment decision and market evaluation across 280 cities globally, and supports currently more than 200 subscribers with their daily or monthly underwritings. Here you can see some of the brands that already leverage the platform or use the underwriting and commercial due diligence. We have multiple levels of potential service reflecting a different stage of potential investors, be it at the entry level for the market entrance, or at expansion and consolidation, or at the exit. And to underwrite the investment story, you need to have a competitive investment and transactional fundamentals, where European student housing ticks all the boxes compared to other asset classes like office or retail. We see a strong student demand with an increasing international student mobility that usually represents the higher purchasing power as well. On the other hand, significant undersupply when it comes to the bed offering, which in many cases reaches to 100% occupancy rates, and of course the consistent rental level growth that we had a chance to see through the major markets across the Europe. And especially on the demand, we've seen a very stable growth in student demand in the last 7 years. And as Samuel mentioned at the beginning, we also expect this to continue, mainly in continental Europe, due to visa policy or student mobility changes in the top four study destinations like US, Canada, Australia, or UK. And as you can see, the European CAGR stands for total students at 1.4% overall. However, there is even more notable growth in international students that achieve CAGR at a level of 5.5% in the last 7 years, and increase the total share of international students studying in Europe to 15% overall. Looking at the top countries, we also compare the countries with the biggest growth of international students and the FDI stock, so the foreign direct investment stock. And we see a stronger pattern, and actually the countries that experience the fastest increase in international students in Europe are also among the most attractive for the direct investments. So the top 10 countries in terms of the growth in the student numbers represents 67% of FDI stock in Europe. So obviously those countries are not new for investors, and it provides an interesting opportunity to enhance the portfolio within the student housing and living sectors as well. Looking at the supply, and when analyzing a supply in general, the private student housing stock started developing in a continental Europe roughly 10 years ago. If we compare it to the UK, current construction activity is at the UK's level recorded around 10 years ago. And you can see the less major markets are likely to follow the UK route in terms of the development of the student housing stock and continuing maturity as well. It means, and I think it is fair to expect, that more student housing schemes will be added to European markets, and new investments are needed for such new developments, obviously, which underlines the need of opportunistic or even value-add capital for some of the repurpose on changing of the assets like office or even other like hotels. And supply and demand story is also underwritten by the lower provision rates across the European countries. While working on a commercial due diligence, investors can underwrite a significant delta between the current provision rates and the potential saturation points across the Europe. Based on the transaction support we've been doing over the years, we also see, and it's important to mention, that while, and even including the pipeline, and while we're looking at the current numbers, with the construction to come, the provision rates remain small, and the market remains undersupplied also in the next decade to come. And this delta, as you can see on this slide, as a case study of some of the market, is not improving only due to low construction pace or smaller number of the openings, but also the bigger pace of student growth, that creates even bigger pressure on the current supply and respectively also the rents. And looking at some of the markets like London in the UK or Milan, Amsterdam, Madrid across the continental Europe, we can see the supply has not been able to catch up with the student growth in the last 5 years, which strengthens the shortage of the stock and makes it a little bit easier to underwrite the demand supply part of a commercial due diligence. And while we looked at a little bit of openings and the need of the development, and we addressed the huge investment opportunity to develop more beds or even repurpose some of the less performing asset classes like office. We also see 400 portfolios in the UK and continental Europe, which provides the opportunity for investors to buy already consolidated stock and operational brands. Such transaction indeed depends on dozens and dozens of the factors when doing the underwriting of such portfolio, like quality of the assets, markets they operate in, operator performance, financial and performance occupancy, NOI and OPEX, yields, pricing, and so on. So all the key KPIs needed for the commercial DD process. However, we can see from the data and from the observations of the portfolio that Europe continue its consolidations, and with the pipeline of the portfolios, it will continue in the future. And mainly it's following the development scenario of the more major markets like the UK, which you can see still represents 50% of the overall portfolio offering. And with the continued consolidation, it's not only improving the sizes of the portfolios and territorial coverage, but also we can see that the newly opened private residencies are much higher quality compared to the old market. Continues building up the high quality amenity stocks. And many times when it comes to underwritings, it's easier to underwrite not only now, but also future, because it ensures the better student retention, rental growth, NOI, and potential exits in the future as well. Looking at the rents, rents have been showing a stable growth in the last 5 years. And student housing sector in Europe was the sector where you could increase the rents and occupancy at the same time, which was probably not that easy for all sectors or for the sectors like office or retail. And it's important to say that rent growth enables stakeholders and operators and investors to maintain the stable margins. And even during the higher construction costs or energy crisis, we saw the margins remain at the level of expected returns and in some cases even improved. And in light of that uncertain macroeconomics in the last months or even the years, we see that investors show more confidence in the investments in the PBSA sector. And coupled with a softening interest rate policy, the yields show the signs of stabilization and even softening in some of the markets. And even based on many conferences in Europe or overseas and hundreds of the conversation that we had in BONARD with investors and potential stakeholders, we can confidently say that there are more investors actively looking into European student housing, preparing strategies, funds, JVs, and all these will generate more capital flowing into the sector and will provide a pressure on the yields in the years to come. And quick snapshot of transactions that were happening in last year in 2024. We all know that last year was slower on the real estate transaction as such. However, in student housing, we saw some significant movements and some €1 billion transaction. One was by Mapletree, or €500 million transactions that you can see on the screen, which was GSA and Nuveen or Azora in Spain. And this year, we again saw €1 billion plus transaction in Europe, which was the recent Livenza transaction acquired by Nido and CPP Investments, but also other sizable transactions in UK, including the Unite, GSA, or even recent Quadrial entry into the UK market buying the Apollo portfolio. And overall, if you look at transactions in the years back to 2023, we witnessed several bigger transactions in 2025, and it shows a growing interest and confidence among the investors. The transactions activity revives slowly but steadily, I would say, after the slowdown in 22 and 23. And we see that institutional capital is not just interested, but is already flowing back into the student housing sector. And maybe just to summarize from my end, and quick conclusion is that we see from the data, but also from the conversations and the conferences, that Europe combines strong and growing demand, chronic undersupply, maturing portfolio landscape, and resilient returns. And all these factors combined is the reason why institutional investors are once again turning to student housing as one of the most attractive opportunities in Europe. And you can see information about us, and at BONARD, we are proud to support this momentum by providing the data, due diligence, and strategic advisory to help the clients to underwrite their investments with confidence and reliable data. So that's for the snapshot. I hope you found it useful. Thank you for the attention. And I'm moving the words back to you, Samuel. So enjoy the panel. Thank you.
Thank you, Martin. Before I invite the panelists to join me in a conversation, housekeeping note that if you want to ask a question, like some of you have already started, please do it through the Q&A section. So you have a button on the bottom of the screen, somewhere on the middle right. And our team will consolidate the questions and help me to ask the panelists the most important ones. So with this, I would like to invite our panelists to join me and turn on the cameras. And we will perhaps make the first round, short round of introduction. So let me kindly ask the panelists to present their name, position, and organization they represent, and then we will go to the panel conversation. Pedro, over to you.
Yeah, thank you, Samuel, and Martin, thank you for the presentation. I would like to start by greeting my fellow panelists and also everyone that dialed in today. My name is Pedro Sousa. I'm a Senior Vice President at Brookfield Asset Management. Just to give a quick intro on Brookfield, we have been an active investor across Europe in student housing for more than a decade, having owned and operated almost 50,000 beds across multiple countries. Through several platforms as International Campus or UXCO, or older ones like Student Roost and Livenza. Mostly we have been recently active through disposals in Southern Europe, and as mentioned already here, the Livenza disposal to Nido, but also we have been quite active on further acquisitions in France, Germany, and the Nordics. And today we're quite happy to be here with this panel to discuss the market trends.
Thank you, Carlo.
Yes, hello everybody. Carlo Matta, the CEO of Nido. Nido is a vertical integrated platform. We operate mainly in Iberia at the moment, but our market of expansion are Italy and Germany. This week we manage 4,000 beds. Next week we will be managing 13,000 beds after the closing of the Livenza transaction. We have been around for quite some time. We want to probably the oldest brand in the European market. We were in UK, we're not there anymore. And we have big plans for Europe. Our target is to reach a total volume of bed of 25,000 in the next 7 years.
Thank you. Juan?
Thank you, Carlo. Thank you, Samuel. Great to be here and good to spend time with the panel and with the audience. My name is Juan Acosta. I am a partner and chief investment officer at Rockfield Real Estate. Rockfield has been operating in the sector since probably early 2010. And we at the moment either manage, own, or operate more than 10,000 units across the Netherlands, Spain, Italy, and very soon France and Germany. Fingers crossed. I have been investing in student housing since very much 2011, 2010. So I've seen a little bit the progression of the continent, primarily in the target markets of which has been discussing. At the moment, our main focus or our main strategies is our open-ended fund that we have with our great partner Ardian, where we brought to the market probably one of the first, let's say, open source 4+ open-ended funds, where we're targeted to build a portfolio of, let's say, diversified assets across let's say the 5 biggest economies in the continent, excluding the UK. So, well, very much looking forward to talk about the dynamics of the sector in the next 35 minutes.
Thank you, gentlemen. And I would probably go to the first topic, which is demand. It's always the most important thing, how many people are coming or knocking. And the topic of the webinar, so Europe. So maybe I do a preface to it that we have seen probably 20 different articles about that Europe is becoming more on the radar of international students and their families to opt as a destination of study. We at BONARD calculated that about 250,000 international students annually from the 8 million cohort will change the direction for like in the years to come. So as the big four, so US, UK, Canada, and Australia have experienced their growth, but are now limiting number of students somehow, which may benefit Europe. We don't know whether this is going to be true or not. It's just sort of extrapolation of the current trend. Things may go this way or different, but what is your view here? Europe has been attractive investment-wise, and it has its fundamentals, but now probably it's topped up with additional demand that is coming to Europe. So if I may ask you shortly to comment on the demand side in Europe, and probably we can do the same order and start with Pedro.
Sure. No, I think it touched a great point. There are, as you said, the main core markets for international students to go, and a lot of them are facing challenges and some volatility, to say. And I think that Europe is very well positioned to take some of that demand. The reason that happens, it doesn't start today, and with this, I think all of us have seen in the last couple of years major European institutions positioning themselves in more adequately to compete on international market by creating more and more English taught programs. That was especially true for Southern European countries, Portugal, Spain, Italy, and then also French business schools became kind of some of the best ones around the world. And you've seen strength on the academia point of view for the last couple of years, and I think that growth right now puts us or these markets in a great position to be able to compete internationally, especially when there's volatility on these biggest markets. That coupled with an increase institutionalization of the PBSA market, which also makes the move to Europe easier for international students. And lastly, I think that despite many headlines, Europe still remains one of the safest places in the globe. That also helps a lot, attracting students, but also even more important, parents that feel that Europe is a safe place for them to come to learn and to have great education and great future ahead post education.
Carlo?
Yes. So Pedro, spot on. I think well, it's never one reasons, right? You need to look at the 3 or 4 or 5 main reasons. One is definitely what Pedro mentioned. English taught courses are getting more and more in continental Europe, and that obviously attract students. But it's not by chance that these universities are now introducing English taught courses. I think is part of a wider, I would say, awakening of the various countries to the fact that if you want to bring economic development to a country or a region in the country, you need to attract businesses. And businesses are attracted by the quality of the talent pool. And then talent pool are attracted by the quality of the university offering where they can go study. And that offering has 2 major components. One is the curriculum, is the quality of the teaching, and the other is the quality of the accommodation. And so, that has driven a renewed interest from government, municipality, regional bodies, etc., to really try to attract, company like us to develop student housing. So I would say English taught courses, the awakening of the various institutional bodies and governmental bodies. And also, if you think about it, if you are a Middle Eastern student or a Chinese student, would you go and study in the US at the moment? Probably not. So if you look at the 3 main poles of the 3 main brands of education, UK, US, and Australia, US is very difficult proposition for an international student. UK is very expensive, and also there are there is a little bit of a populist climate against the student. Australia is going the same direction, and then of course it brought a huge new interest for university in Europe. So I think it's a combination of factors.
Mm-hmm. Well,
yeah, and building on, I just try not to repeat. Carlo touched the point of mobility on Chinese students. I mean, we have to remember that probably 4 or 5 years ago, when the whole situation with Brexit started and came through, it was more difficult to go to the UK for a number of countries. Also for European mobility to the UK. UK historically a magnet for education, and rightly so. We had a great university infrastructure. Then now we are adding the volatility in the US. Then COVID came, so you are building up on those events, right? And then you are through all this dynamic, and then you encounter a continent that, on a general terms, is very friendly, is very receptive to students. Then another thing, when you look at all-in study cost, as Carlo was saying, you have the quality of the university and the quality of the accommodation, but then you have the price of the university and the price of the accommodation and the price you have. And let's just be honest, you should go get a beer if you're a student, big part of their budget, right? Europe's still very competitive on that front. And then there are country specific. Some countries are doing a very good homework. And just to give you a concrete example, around 2 years ago, Spain facilitated for a number of countries in Latin America, for example, Colombia, with very young population, 60 to 70 million inhabitants, to essentially just pretty much come directly to university if you want to come to Spain. So essentially you are removing the barriers and you are increasing the offering. Altogether, it's putting Europe in a great spot at the moment.
Thank you. I will move to transactions, last 12 months, next 12 months. And as I will be elaborating on this with you, I probably ask my team to prepare the first question for the poll so that we can let the audience vote and give itself live feedback. So you can prepare the question number 2 in our internal counting. Sorry, 3. So my question to the panelists, and probably this is a reason why many of the delegates came. If you can share your view and experience from the recent transactions, you are probably the most transactional organizations in student housing in Europe in last 12 months. So what have you learned from the deals that you have done? Or what is your sort of sentiment about transactions in next 12 months. So maybe we can go the other way around and start with Juan. You have done impressive number of transactions, not only for the last 12 months, but in general. So you're probably the most competent here.
It's good to have sales side partners like the ones that I have in the panel. So that makes life a lot easier. So I wanted to build what I was saying before, right? So those structural changes that we were talking about, actually, we left COVID and the real estate cycle change, and actually maybe generalizing student housing came with a proposition which was quite interesting, right? You have, let's say, superior rental growth to residential. Essentially, you can solve inflation and potentially even more than inflation, which is so from your report that we see in our properties. And on top of that, there was cap rate correction, right, that make the case of investing in student housing from an investor perspective more feasible, more viable, right? Investors at the end of the day, they just allocate money professionally, and that could be student housing, senior housing, or retail, but the asset class needs to offer that opportunity, right? So the numbers started to stack up, right? Our approach to transaction was to build our portfolio, let's say, on a one-to-one basis, right? So we probably went a little bit the hard way because, together with our partner, Ardian, which have a footprint across Europe. So we were just buying asset by asset. And since the last 12 months, actually, we're probably down to nine transactions closed, and with 2 in due diligence, right? What had we learned in the last 12 months? I think in this asset class, a lot of the basics applies, right? Your local relationships are key. Your track record in that market is key. Maybe now the asset class is becoming more professional, so you can add a layer of global relationships like the one we have here. But at the end of the day, if you look who is buying and who is selling, typically more often than not is a team that knows the market pretty well, right? Has a good relationship with a counterpart that either know each other or traded before, and they're able to execute. It's still quite, let's say, hands-on. Deals are not easy. It's not that you have, let's say, 25 deals out there per market to close. So you require the depth and the expertise to get these deals over the line.
Okay. And Carlo, biggest transaction last 12 months?
Well, I'm the only one in the panel that we bought from Pedro, and we sold to Juan. So I'm in the middle, and I've seen both. So, but first of all, a comment on the poll is very difficult to say what the level of transaction will be next year in terms of percentage, because if you look at your 2 slides on the transaction, you take out one transaction, you take out 50% of the volume. So, every transaction really skews the final result. But with that said, I think what we learn, and I think is something that I personally learned a long time ago, but the quality of the counterpart is key, right? Because you need counterpart that speak the same language. And when I would encourage all the investors that are looking at buying stuff in Europe, look at the counterpart, because that is your transaction risk. And the difference is between transacting fast and painless, or transacting taking like 9 months and going through a lot of pain. So that is number one. Number two, always keep a line of communication principal to principal. So I was talking to, Juan was calling me when things were getting a little bit out of hand. And you always resolve problems, because the team tend to probably get either very tired, they're very involved, they get confrontational pretty soon, pretty fast, and that diffuse the situation. And number three, I would say, you can be only as fast or you are as low as your legal counsel. So select your legal counsel very wisely, because they are the one that will slow you down or will allow you to be fast on the transaction.
Pedro?
Yeah, so just taking a little bit of what was already said, in terms of transactions going forward, to Carlo's point, right? It depends really on what big platforms will come to market, because those are the ones that shift the numbers and skew the numbers quite a lot. And we see that traditionally, whenever there is a big transaction, IQ, Student Roost, Livenza, there is a big uptick on the transaction side. It doesn't mean that the market is less strong on the other years. It's just an outcome of what's in the market to be sold at each point in time. I think at Brookfield, we sit a little bit on the middle of the two worlds, because as Juan, what we usually do is we grow asset by asset in each of our platforms. And then when we transact, we usually transact big platforms. So I think we see, to Carlo's point, when we transact the big platforms, also by the nature of the platforms, we always have outstanding partners on the other side, which makes transactions much easier. They're not easy, but they are easier to be done, and obviously that helps a lot. But then when we are on the buying side of these smaller portfolios or unit by unit or portfolio by portfolio, small portfolio by portfolio, what we also have is, and Juan probably will feel that often, is you are in sub-markets where there's not much product to be bought, and sometimes you have to build it. And then the biggest challenge is there's a lot of data, there's a lot of information, but often there's not comparables to be seen on certain markets because the depth of the market is not there yet. So I think we struggle a little bit on that side as well, because a lot of the information we take from from guys like you that produce amazing reports, but you cannot cover the entire multiple student cities across Europe. So there's often the challenge of going to local developers, dealing with the municipalities, explaining what PBSA is, why it is good for them. So, and that takes a lot of time. And although I do believe there's a lot of movement on this part of the market as well currently, it just takes a lot of time, and it is a small kind of volume transaction as a whole, and therefore the year ahead I think will be a good year. I think we will keep student housing as one of the most dynamic asset classes in Europe for real estate investment. But then in terms of size, it just depends on what platforms are going to be sold.
Maybe connect to what you just said, I will ask my colleagues to post the results of the vote. Okay. So over here we can see that about cumulatively bottom 20% of the options are that there is a belief that there will be similar or less transactions in 26 than in 25 in student housing. And about 80% of the crowd believes that there will be more transactions in next year, while the increase tend to north of 10% are the most of the answers, which probably is the mood of the market, that it's going rather upwards in terms of transactions. And that's also copes with our experience that investors invested in multiple asset classes prefer student, and as soon as the numbers work, they would invest in student. The competitor of student is, if so, German bonds, but not necessarily other asset classes. When the investments to real estate is approved, it's usually student over retail or over other asset classes. So that's what we experience. So moving to next topic, I would say I would put together valuations and capital raising. So are we gonna see somehow the yields to shift? We will see further compression. So far we have seen that the student yields decompress in 23 and 24 less than the general real estate, probably half the value. And now the transactions in Q4 24 were basically almost at the level of pre-September 22. The volatility of the market since sort of February 25 has probably reaching the same levels. The differences are sometimes overcome by earnouts. So where do you see next 12 months? The yields, the deals, the sort of valuations, which direction will it go? And I know you often see it on a buy side or sell side, so you might have different optics here, but still, it would be nice to have your view. So maybe Pedro?
Yeah, absolutely. Look, I think it will be a dual kind of situation where good quality properties will trade at the same level, if not the sharper yield going forward. And then you'll have everything else that it may struggle a little bit still to recover fully. In terms of capital available, capital raising, look, we work with a global pool of LPs, and student housing is still on top of everyone's priorities, which is great. In terms of market, in current market availability, I would say it's more within the value add and core plus type of capital, meaning that a lot is being put in developments, and then for core plus in bigger platforms and more stabilized assets where there are still really good opportunities given the previous market dislocation that we've seen in the last years. Now, what I do feel, and I'm saying this without seeing that specific core money or core capital on the market, is whoever takes the view, the first really core capital to take the view on the market has an unbelievable opportunity to grow, scale really quality assets at a still quite nice basis versus what was the peak of the market a couple of years ago. So I do think it will be an interesting market as more and more capital becomes available. People get more comfortable with the market, getting more comfortable with the KPIs that we see across. Now, having said that, we have one of the most volatile political environments in the world right now, so anything can happen. But maintaining all things the same, I do believe that good quality assets will start trading more and a little bit more sharper than what we've seen so until now.
Carlo, your inputs here?
So yeah, I subscribe to what Pedro said. So we are cautiously optimistic. We have seen the cap rate pretty much, decompressing and then being stable. I think now is the time for the next 12, 18 months where I think we will see, a compression again, brought by an increased interest in the sector. Although every time you talk about cap rate is the crystal ball, because the data of inflation as today is seems to point at the opposite direction, but we'll see. But I think that with more capital coming in into student housing in continental Europe, as the sector becomes more institutionalized, more professionalized, thanks also to guys like you, BONARD team, I would say that we'll see sharper yields.
Mm-hmm. And
yeah, maybe keep picking that up. I think we are seeing that trend in our, let's say, valuations and our, let's say, the cost that we pay for the deals and the valuations they are flowing into. So you could see some pressure downwards. I think it's also makes sense. I mean, if we are back to 2022, based on your data, right? We reach all-in cost of debts. It depends on the market and the country, anywhere between 4 and 5% all in. I think that has come down, right? That relieve a little bit of the pressure on the valuation. And then if you add that some transactional activity in the shorter term, that needs to really bring the cap rates down, right? Subscribing what Pedro and Carlo were saying. In the longer term, I think the longer term means probably something that the asset class could still work. I think the student housing has always struggled to project cap rates or exit cap rates. I think we need to work with the data points that we have, which is interest rates, residential yields, right? And then factor risk, basically risk factors for premiums or not to the asset class. Probably sometimes we complicate a little bit, but I think at the moment where the bond yields are, let's say across Europe, 2.5%. So prime yields across Europe, according to BONARD, are anywhere between 4.5% and 5%. That's not a bad a bad place to be from a real estate perspective. Then on the capital raising side, in a way, we have been blessed by the support with our partners, and together with Ardian, we raised, let's say, anywhere between 800 million. We're getting hopefully closer to the billion, but it's a hard war that wants the capital. I get the feeling that you have selected parties that left or right have been able to get capitalized, and with that capital, they will go and buy the market, and probably some of them are in this panel. But it is not, let's say, pre-COVID or pre-2022, where everybody had capital and everybody could invest. Now it feels that the winners are even more winners and the losers are even more losers. So the number of counterparts probably are smaller.
Mm-hmm. I have a supplemented comment, but we can post the results before I say so. So over here, the crowd or expectation on transactions volumes in 26 to 25. So we see that the most of the responses sit around that the yields will stay the same. And I can admit that based on the conversations we have with our clients or transactions that we've been supporting with the data, that the underwritings are still sort of done under the assumption of the yields to remain the same rather than compress. So there is a cautious optimism still. And this is pretty much coping with what panelists are saying, as well as the crowd responded to measure the market mood. Okay, consolidation. So in the UK, there are around 400,000 bets private, but 100 portfolios. I'm just rounding it up to be to make it easier. So the ratio is 1 to 4. While in continental Europe, there are 850,000 private bets, but 400 portfolios, north of 400 portfolios. So the ratio is 1 to 2. So continental Europe is 2 times more fragmented than UK, we can say. And there is a lot of room for consolidation, which is not only the sort of development capital, but consolidation capital. So how do you see this evolving towards, creating bigger brands, large-scale institutional operators entering the arena for consolidation like we experience in the US and UK? Is it the time for it in Europe already? And Juan, if you can.
Shall I start? We are switching the order. No, I will give you some examples, right? So in my former role, we used to own and run what is today the largest Spanish, let's say, student housing operator by a small margin now after Pedro came, right? So that platform, give or take 11,000 beds, it took 30 years to get to 11,000 beds, right? Pedro worked very hard, probably anywhere between 5, 6, 7 years to get to 7,000, 8,000 beds. If we compare to the UK with the unites of these wards and some of the portfolios, right, where you are actually in the 30, 40,000 units or more even, right? Europe is small. Our companies are small. Our companies have small balance sheets. We need more. We need more Pedros, we need more Carlos, and we need more Juans. And we're going to talk about operations later on, right? Because we need larger balance sheets, we need more efficiencies to deal with everything that is behind, right, operating student housing. And actually, we need good capital structures, right? Europe, up until very recently, and we're talking about probably really the last 7 years, right? They didn't have, let's say, permanent capital or institutional capital back in the asset class, and everybody was, as you say, very small, right? Going forward, answering your question, absolutely yes, right? It is a time to consolidate. It is a time to growth. We need either per country or the European levels, we need a couple of companies that can bring a better product, more efficient, cheaper, better managed, right? And with, let's say, a long duration, right? This is probably the reason why we as a company access is because we want to give this asset class the time and the air and the breath that needs to stabilize, right? We didn't have that until very recent in Europe. It's super encouraging to see that this is starting to happen. I am a firm believer of M&A, and also just to final remark. Also, developing in Europe is very complicated, so you will see companies, let's say, acquiring other companies in a way to speed up growth. So altogether, I think that can only come for the benefits actually to everyone really in the market. So we shouldn't be afraid of that consolidation. We should probably support that.
Mm-hmm. Carlo and Pedro.
So yes, consolidation. Yes, the big hurdle, and I agree with Juan. We need bigger balance sheet and more money and more of us. But the big hurdle in Europe is lack of product, lack of institutional and investable product. So yeah, consolidating. What do you consolidate? Really, it's very difficult. The portfolio, the quality of the events, they're very very rare. So that is the first is a big hurdle. The other observation I would say is that we are moving towards the next phase of the European student housing investment, whereby big investors, like the investor they are backing Nido, the CPPIB of this world, they decided to go deeper into the weeds, to really go deeper and become more vertically integrated. So they buy a platform like Nido. They will provide the operating capabilities and expertise, because this is a way for them to have more control on the quality, on the execution, et cetera, et cetera. If you look at 10 years ago, you had the typical operating partners, you had the allocators. They were getting money from the source of money. They were allocating to operating partners. The operating partners were running around the country to try to find a pipeline, develop or acquire asset here and there. I think that is kind of changing a little bit. And when you have the big players coming in and become more vertically integrated, by definition, you will have consolidation, because all of a sudden it becomes all about scale. Scale becomes the name of the game. And I think we will see more of that.
Yeah, I tend to agree. There is a fundamental change between the UK market and the US market, and it's very clear. European market is not one market; it's an amalgamation of countries, all of them with their, rules, laws, planning constraints, but also even academic dynamics are different. So, by nature of the field, consolidation is much harder and takes much longer. And I think that, both Juan and Carlo mentioned, it is about the type of capital available for doing that consolidation, right? You need time, you need money, so you can create a big pan-European platform. Now, having said that, the size of the European student market is huge. So anyone who has the time and the money to do it can create a player as big as any in the US or in the UK. Because it is an immense student market and it is a great market. Now, to point that Carlo was making, it is a market that is still to be built. And at Brookfield, we took that view. We've been very active in markets which we saw they were nascent. There was not institutionalized product, and we went there and built it. Right in Spain, took us a couple of years to open almost 20 assets. In France, we ended up buying an operator and also buying a development company, like a pure development company, to grow the platform. And now it was the way for us to break the market. And now we have almost 16,000 beds. We've done the same in Germany and doing the same now in the Nordics. So we look for those kind of markets where there's no institutional product, and our target is go and make it. So then we do believe that there's going to be a consolidation, institutionalization of the market, and hopefully we create the product with enough scale and quality for an aggregator to come in and say, this is perfect, this is really what we want, and consolidate their position in the market. So I think the ecosystem is there to work. So, but it will take time because it is a much complex, playing field than it is UK or US.
We have 5 minutes remaining, so I would use it with something that I started with, which is demand. and I would go to demand and operation. So I would ask my colleagues to put the polls on occupancies for Q4 25, as we are at the beginning of academic year. So where do our delegates see the occupancies for Q4 25? And sort of with this, I think one of you mentioned that with the bigger and more experienced players, there are more efficiencies. And with the consolidation, the bigger players can bring in not only economy of scale, but also a better operation and occupancies, increase the NOI, etc. So sort of where do you see this market in terms of operation and improving and consolidation in operation? There are our experiences that there are about 130 opcos in Europe for these 400 something portfolios, but only 30 of them operate independently. So we don't have many student housing independent operators. So where do you see this operation versus occupancy correlation in the coming year or so? And I leave it to probably starting with Pedro.
Yeah, look, we are big believers of vertically integrated structures, right? There is a lot of factors we cannot control in the market, but if there are key levers that we can control, we'll try to do it, right? So, and having a vertical integrated structure help us, be more efficient, help us having better sales teams, having, better capacity to attract demand, and that is then, pre-reflected on our bottom line. From starting with the revenues, because of occupancy, as as everyone playing on this market knows, it has been very strong across Europe. Virtually full occupancy at the beginning of academic years, and then each market has their own seasonality. And we believe that one of our major strengths in all the portfolios or platforms we own is the fact that we have amazing teams, from the CEOs to the guys on the receptions that work really in conjunction to try to build something unique. They believe in the product, they believe in the brand, and then they go the extra mile for your own brand, right? And I think that is from the start something we've rely on. And look, it's quite painful to build companies from sometimes nothing. It takes a lot of time. But if you find the good people and you retain them, they will be doing go above and beyond for you. And then I think is what helps across the sector, seeing such good occupancy, such good growth, and so many good bottom lines across so many different platforms. Because I'm talking about Brookfield platforms, but we're not the only ones. There are really good platforms out there and really good integrated businesses. And I think that is been fast forwarding this institutionalization of the market, and more of it. I think as all of us scale, we will be ending up unlocking much more value on the operational side. And the only thing we then left is the market, and then we cannot control.
Thank you. Carlo?
Yeah, so it's not about operations, right? We need to remember we are a customer-facing business. So operating is key. You can have the best asset in the world, in the best location in the world. If it's not operated properly, you're bleeding value. But if you have the right people, the right team, and the right operation, you're creating value. So that is key for us. It's key for Pedro, and Juan is they're doing the same thing. I think we are going to a place where it's not about yield compression anymore. It's about portfolio management and property management, marketing, leasing, and creating a product. And when I say product, I don't mean the room, the bed, or the amenities, or the community. Is all of these things. So it's a product that you can sell and can make our resident happy. Let's remember that we have a very specific cohort of customers. These are young kids. They think they're adults, but they're not, and so they need extra care and extra management, extra attention for them, to be retained in the building and for the brand to grow.
Mm-hmm.
Maybe to wrap up on this point, you mentioned 130 opcos. I think this is where Europe it's in the minus. If I look us collectively as an industry, and I'm part of that industry, I think that the number of, let's say, high quality institutional level operators is very few. And honestly, I can put in one hand without trying to offend anyone, including ourselves. Not everybody is good in every single country, right? There is dispersity in the quality of the execution. You can have great teams in Spain, and you can have a horrible team in Germany, and they were around, right? And I think as a business, as an industry, we need to improve a lot, because what basically was Carlo was saying, right? I mean, in theory, it's a simple business. We need to let a room, collect the rent, distribute that euro to us, the investors, and we give it back to our ultimate investors. That simple process, that vertical integration, I think in Europe has a way to go. I'm on the investment side, but I can tell you I spend significant time of my time in things like IT, marketing, operations, health and safety, and things like that. So I think the steps done are great, but I think if we want to really unlock the value of this very large space, I think we need probably 10 or 15 high quality large platforms that they can really give comfort to everyone in this market. And in terms of occupancy, maybe just one final point. Yes, you could see those high levels of occupancy, but it's a story of each cities, right? Some cities are doing really great. Some cities, they have probably a little bit too much stock. And then back to Carlos' point is, if you have the right team, you're probably going to outperform, right? So it's not that you just open the door and suddenly you get 95% occupancy. It actually takes a huge amount of work to get one tenant in and keep it.
I tend to agree. Before we post the results of the polls, basically, I can connect to what was shown at the beginning, that it seems like the overall demand for Europe is not a problem, or the overall demand in general is growing faster than supply. Also, the rents seem to be reasonably in line with inflation and year-on-year growth. And they can change faster or more often than in office or elsewhere that are tied to inflation only mostly. But it's the particular asset location and operation that makes a difference. And it was very well said by Carlo. I think that we cannot control the unlocking of the potential through compressing yields any longer, but we certainly can by adding value through operation. And with this, I probably ask my colleagues to post polls results on occupancies. So as we can see from that, basically north of 80% have more than 90% occupancy or waiting list. I would say it's reasonable, because what we are receiving the reports from some of the geographies, especially in the UK, that the occupancies are not so easy to get as it used to be previously. So if you have both contributors here from the UK, they might reflect over here. On the other hand, we see some of the UK operators coming to Europe now, which should professionalize continental Europe and be in line with what was basically said by the panelists. So to respect the time allocated for the session, I would first and foremost like to thank you, our panelists, to share your time and experience. I would like to thank our BONARD team to prepare the session and our delegates to participate. I hope this was a contribution. The recording and the deck will be distributed after the session. And I hope that we will meet at the next sessions or with some of you as our clients or future clients. The free demo platform session is available to be booked through our team at data@bonard.com. Thank you all and enjoy the new academic year. All the best.
Thank you.